Welcome to Value Validate. Here we post a top value investment every month, but all the prep work that goes into research flies out the window the moment you get punched in the face, like Mike Tyson said. Execution is 9/10 of performance. And so this technical update series aims to highlight the journeys that happen after the research is done. In the month of August, we're going to look at the 3 months since we posted StoneCo in May. I'll give brief reminders of what we learned in the value validation, but please check out the full videos to get deep. StoneCo is a Brazilian fintech, definitely one of the top 5 fintech companies in Latin America right now. In June, we dove deep into Paramount Global, which was, at the time of posting, the largest value company by market cap of 2025. Paramount Global is hours away from completing its transformational merger that it has been inching towards for well over a year and a half. We're going to check in what the technicals have been doing in response. And then lastly, just last month, we covered VeriSign Inc., the granddaddy of the internet, .com domain registrar. Very big news coming from the conglomerate Berkshire Hathaway, Warren Buffett's baby, related to a secondary public offering for VeriSign. What has that done to the market? These were our value validations. This is a new series, technical update series. Let's dive in so that your wisdom can blossom.
This video is intended for educational purposes. Opinions made by me or the Sage Seeds AI are not investment advice.
Looking first at our May post, StoneCo. I like to use finviz.com. They don't sponsor me or anything, but I do like to use them. They auto plot things like channels and wedges. All of these are daily candles that we are going to be looking at for this series. Well, here I've rewinded back to May 1st. This is what the chart was looking like when the video went live. We had already established an upward channel at this point. All 3 moving averages were stacked on top of each other in the best way, and the close on May 1st was $13.89. That is about 3% higher than the most recent price displayed prominently up here in the top right. Let's snap back to the current day. We're going to add the last 3 months in all at once. The very eye-catching thing which we have to talk about is this very epic, and I hate to say epic because I very much was on the wrong side of this when it was happening, but epic downward rejection off the top of the channel that we were aware of. I mean, this is 1, 2, 3, 8 straight down days, the briefest of respite, a tiny little trigger bar, and then it looks like another 8 straight down days. I mean, July has been an absolutely epic crash, and the price now in the last couple of days fidgeting around the very bottom of this channel. We got to ask ourselves, is this even a valid channel anymore? But let's take it one step at a time. What initially happened during the month of May is plenty of us could have been picking up shares as the price fiddled around with the 20 SMA simple moving average. And then there was that push that we very much would have expected to see in this situation, all the way up to the top of the channel, price reaching a high of $16.68. As soon as that closed above the channel, lots of people must have been looking at very similar levels and deciding that that was enough for them. Profit taking, profit taking, profit taking. I mean, if you were not satisfied with that $3 push upwards, this correction very much stretches to the very limit of what would have been a reasonable pullback. Definitely not a stock to hold for the faint of heart. If someone still is holding on to StoneCo, please let us know in the comments. How are you feeling? Are you okay? Even I would have suffered and sweated throughout this terrible 2-3 weeks period. Fortunately, although it's not really reassuring in the stock market, it seldom is, this actually isn't completely unlike the pattern we saw back in April, back in March, and even at the very beginning of 2025. StoneCo is that stock that, at least at the very beginnings of this trend, is really pushing down to the very bottom of the stop losses. Finviz still thinks this upward channel is valid. At this point, it's getting a little dicey. I wouldn't necessarily be the craziest thing if we start to fall all the way down to the 200 SMA down at around $11.30. That shouldn't surprise anyone if it happens. And if it does, it would mean this channel is broken officially. But for now, just barely holding on to it, and not the first time that the channel has been threatened so egregiously. StoneCo continues to be a super difficult company to hold on to, with plenty of sophisticated buyers knowing exactly where to push the price down. And clearly, according to this epic drop, having very little issue pushing the price down when liquidity is at these lowered levels. I hate to say it, but when you're swimming along the big fish, splashes like this are par for the course. All right, let's close it there. In June, we looked at Paramount Global. This company is finally about to do its merger. Back in June, this is the rewind. These bars weren't actually drawn back in June. These are now drawn because FinViz is detecting the 2 months that have happened since. But back here, we didn't have these two lines. We didn't have this wedge. We saw that this was very much a ranging stock for only the second time in a period of years beforehand, having all of its moving averages aligning in the way that marks a strong bullish trend. That happened briefly from February to around mid-April. There was this big dip that broke that trend, and then it was just starting to happen again when our research video went live. So let's snap back to the most recent day, adding the last 2 months to the chart. Oh my goodness, that pretty dangerous looking. And this is a weird chart. It looks terrible. It is terrible. We're going right through it right now, actually. The context missing is that right here on this trigger bar, Paramount Global officially announced the date of their merger that they've been waiting for nearly a year and a half. It's going to be, I think it's tomorrow. So they announced on this day that there was a week until the merger was finalizing. All of this time, people had been waiting for the merger to happen, waiting for the merger to happen. It finally happens, and look what's going on. People immediately being forced to decide, are you going to want to hold this during the transaction date on the merger date? And anyone who's deciding they don't want to hold Paramount Global shares on the merger date is having to discount their shares aggressively in order to release them right now. This is some mad crazy volatility. Absolutely it is. The video came out right here around June. Similar to StoneCo, immediately after the video, there was a period where people could have been picking up shares right around the 20 SMA. And in this case, we had a very healthy looking push up to the top of the channel, then a more measured pullback, something that we're more accustomed to seeing. And then it pushes again up to a brand new high, a high of almost $13.60. And just everything absolutely goes crazy. Now, according to FinViz is suggesting that this line right here, the bottom of the wedge, between 1060 to maybe 1050-ish, this little range, this zone, FinViz thinks this is going to be an area that supports without breaking the new wedge. But all of that goes out the window because after tomorrow, Paramount Global, PARA, is going to become Paramount Skydance with a new ticker, PSKY, PSKY, and that's the ticker we're going to be looking at in the next technical update 1 month from now. And because it's a new listing, it will look very much like an IPO type scenario. Paramount Skydance is going to be, for at least a little bit, playing by IPO rules. And you know, of course, this is where it gets very interesting. Personally, I think this volatility does not go away in the new ticker. I think similar levels of volatility will very much be happening in the first week, 2 weeks, maybe even 1 month of PSKY listing. I'm talking about anything from 1050 to 1350 is very much fair game. And then at that point it becomes, is Paramount Skydance going to have a slight upward bias or slight downward bias? I think anything above this 200 SMA, 1150-ish or so, if that's where the price spends most of its time for the new ticker during the first 2 or 3 weeks, then at that point, all the people who have been watching Paramount Global, waiting for the merger to resolve itself, waiting to see what happens, well, they'll start to nibble. They'll start to nibble as soon as the end of August, certainly by the end of September. And by mid-September, by the next update video in mid-September, I think we're going to be able to tell if Paramount Skydance is going to start to become one of the top momentum stocks. I think fundamentally, we see that the fundamentals here have everything that it needs to become one of the top momentum stocks of the next year, but we can't really make that call yet. It's going to be in the next couple of weeks and with the brand new ticker listing where we're actually going to see if the technical update takes all that potential that the fundamentals have and start to create an actual momentum story for Paramount, finally leaving this range that it's been in for so long. And we could even see wedges turn into full-on channels, start to measure something that looks like an actual breakout. Imagine that. Very few of these entertainment companies break out, but if one of them is going to do it, it's definitely going to be Paramount Global. Let me know if you agree in the comments. Let's move on to the last company we posted in July. fly. VeriSign Inc., we don't often have pure technology companies making the value list, but here we had one. Just a month ago, we saw the very beginnings of an ascending channel here. And as you can just kind of eyeball here, VeriSign has been a momentum stock throughout all of 2025, one of the strongest momentum stocks. So let's snap back, add the last month. What is going on here? Terrible, terrible, terrible. There was an earnings announcement right here. Absolutely stellar earnings, by the way. And VeriSign, which had been really basing around this level since all the way back in May, jumps off the earnings report to well above $300. I think it even surpassed $310 at its peak. But then right here at its peak, there was another announcement. Berkshire Hathaway announcing a secondary public offering. The effect of that secondary public offering was immediate, was swift, was terrible. And I'm not going to lie, it was pretty rude of them to do this. I don't think they meant to, obviously, but it was pretty darn rude. I hated it at the moment. I'm still healing. Berkshire Hathaway has been an investor for so long. They have a huge, huge position. When they need to reduce their position in this company, they had to work with an investment bank in order to properly reduce their position at a stable price. The stable price they announced on this day when we were trading well above 300 at a price of, I think it was $280. That was absolutely devastating to see. After the earnings, we had the high of the earnings, and not even a day later, you're seeing that Berkshire is going to start selling for $20, $30 less than what the current price is. No, thank you. I don't want to go through that. At the same time, when you pull back, look at what has been going on all summer. You can see that Berkshire Hathaway had no idea that the price would go up to $300 after earnings. They had probably engaged investment bankers somewhere in June, maybe even as far back as May, and $280 is very reasonable strike price for their secondary public offering. When you see that, look how long it spent time around $280, basically the whole summer. And so a bit of a unfortunate series of events for VeriSign in the last month. A very exciting earnings report. I mean, a damn near perfect earnings report, honestly, a stellar one. Absolutely nothing in that earnings report that would suggest that the upwards momentum is being threatened at all. But then Berkshire Hathaway having to do what it has to do. A bit of an awkward timing. The price falls back down, and you can see it's now very quickly settling at our prices that we haven't really seen since as far back as April. As unfortunate as that is, the context here doesn't really threaten the upward momentum. This is just the sort of blip that it has to go through. It could potentially, a month from now, look something like what we saw at the beginning of April, where there was a couple of gap downs, then it had to rebase, and then it started to come back and resume its thing that it's been doing all year. But of course, we never know what the future holds. One thing I can tell you is that despite this gap down and this whole awkwardness and this massive volume, the 20 SMA is still above the 50 SMA as of today. And it's been well over a week since the actual secondary public offering day. Still hasn't creeped below. There hasn't been a death cross here. The market doesn't want this to lose momentum. It just has to digest the massive volume that Berkshire just unloaded on the market. The fundamentals are certainly there, and we get deep into that in the value validation video. Please check it out if you have not. Let me know in the comments which of these three companies you're holding on to. Did you do a swing trade? Are you building position trades on these companies? This technical update was a little bit rough for each one of these. August has not been a very kind month to investments so far. Again, this is where real value investors quickly learn that the reason people don't make money on the stock market too often is that every company that's going to make you a lot of money is very difficult to hold, to show you that you're not alone, to sympathize with you that yes, you can do all the research in the world, and it doesn't make it any easier to actually make money on the stock market.